Good morning, everyone. This is Bag of Dawn at StockMarketCaddy.com. It is April 2nd at 9 a.m. And you're looking at the TradeStation product called Radar, loaded with our proprietary indicators on the market. I wanted to take just a couple of minutes and offer a commentary on the subject of high frequency trading, what our interpretation of it is. Which you're probably not going to hear from too many places. Maybe someone like David Stockman and maybe someone, at Zero Hedge. We have known ourselves really first became aware of the dark pools, the high frequency traders, and the impact on the markets in the summer, early summer of 2009. It became quite clear. And if you notice our markets, we have 60-minute, 240 daily, weekly. Notice what market is first: volatility. And then we have all the indices. And then if you scroll down, we have all the currencies and everything else that's virtually traded in the world, just about all the major markets. The volatility is first because that is the mechanism by which the big con is being played. If you go back and you look at where the volatility was in March of '09, it was off the charts. Now, how do the high frequency traders, what role are they playing? And I haven't read his book yet, but if he didn't address this, he needs to write another book, and a much more important one. It's the volatility that they're knocking down, and how is it they came to be and for whom. In our view, in years gone by, the individual brokerage houses were making their own markets for their own clients. But as the system crashed in '09, and as the Federal Reserve and the banksters, the banking cartel, had to restore confidence into the markets, how best to knock down volatility. It was probably difficult to do with the individual brokerages, but they in essence created the mechanism. I'm not going to say that they created the high frequency traders, but they created the environment, the mechanism for them to come in and do what they do. They put, they allowed by giving them access to the exchanges themselves. You've already heard these interviews. The access to this information, the brokerage houses are complicit in it. They allowed the mechanism for the high frequency traders to come between the brokerages and the exchanges. They make a good buck, obviously, one losing day in 5 years, that sort of thing. But it isn't so much even the pennies, and the pennies do add up, and I think that all is bad. But the real bad part is that they're there to knock down the volatility. So if you go to any kind of weekly or monthly chart and you look at the volatility index, you can see how it's been crushed out. And that is their function. That is their job. And that is at the behest of the Federal Reserve and of the banks. That's why we don't really see or have free markets, because when the people start to react, or the market starts to react, and the volatility begins to spike, it's very easy for the Federal Reserve in conjunction with the HFTs to really knock that volatility down. And that's in essence what they're doing. We believe. That's our interpretation, and it has a much larger effect. So we kind of think of the volatility index as maybe at one time it was the polygraph for the market. Now it's the propaganda machine. So when volatility raises its head, the banksters go to work, and it's because of the structure of the HFTs that they're able to continuously knock down the volatility. And people will not, the sheep won't put money into a market if the market is gyrating 100 points, 200 points, it gets volatile. So it was very important for the banksters, the Fed, to have some structure to be able to knock down the volatility to create what they've created down here. But they've created a monster now. And it's not going to be the Fed. It's not going to be the bank. It'll be, these little HFT companies that'll have to, take the knife to the back, I suppose, because I think we're reaching, terminal velocity here. Everybody knows. When you're seeing it on the state media or on 60 Minutes, everybody knows 5 years after the fact. So be careful, folks. Get an education from someone. Are the markets rigged? Of course they're rigged. They've always been rigged. Can you win this game? No. Can you make a good dollar and be profitable? Yes. But you got to develop a systems approach, a disciplined approach, understand the markets and the relationships, and really get a good education from someone, a mentor, and then also you're not going to learn anything from the Contrarian News Bubble channel. No more than you would learn anything from MSNBC on Obamacare. Good luck. Be careful.